Welcome to today's What Moved the Market show. I'm your host Prem. It's Thursday, February 12th, 2026, and here is everything you need to know as the markets close for today. Dalal Street wrapped up a rough session with a clear risk-off tone, led by a brutal sell-off in information technology. The Sensex closed near 83,674, down about 0.66%, while the Nifty 50 settled around 25,807, lower by roughly 0.57%. Bank Nifty was the relative outperformer, ending almost flat near 60,739, slipping just about 0.01%, as select banking and financial names managed to hold their ground, even as growth and tech counters were hammered. Under the surface, the story was all about a sharp derating in IT and broader concerns that rapid advances in artificial intelligence could structurally pressure the offshore services model. Heavyweights like Infosys, TCS, Wipro, Tech Mahindra, and HCL Tech saw deep cuts as investors questioned earnings visibility and margins in a world where more coding and maintenance can be automated. This sectoral meltdown dragged both benchmarks lower. Foreign investors turned significant net sellers, offloading equity worth a little over 850 crore rupees on the NSE cash market, while domestic institutions stepped in aggressively with net buying of about 1,410 crore rupees, cushioning the fall in banks and select large caps. On the currency front, the rupee inched a bit stronger against the dollar, with the dollar-rupee pair slipping to around 83.6 by the close of its recent highs. That small pullback is mildly negative for exporters, but broadly supportive for imported inflation. Turning to individual movers, the pain in IT was evident right at the top of the Nifty losers list. Infosys, Tech Mahindra, Wipro, and TCS all slumped between roughly 4 and 5%, extending recent underperformance after a wave of global selling in technology names and fresh commentary around AI tools potentially compressing pricing power for traditional outsourcing. Midcap IT names like KPIT Technologies and Coforge were hit even harder, sliding over 6% intraday as traders rushed to de-risk crowded positions. In contrast, the leadership baton moved decisively to financials and select domestic cyclicals. Within the Nifty 50, Bajaj Finance rallied more than 3%, with Shriram Finance, Eicher Motors, ICICI Bank, Trent, and Bharat Electronics also finishing firmly in the green. Stronger domestic demand trends and supportive credit growth meant investors were willing to rotate into high-quality lenders and consumption plays. In the broader market, Max Financial Services, HUDCO, Muthoot Finance, Tube Investments, and Ashok Leyland featured among the notable midcap gainers. On the small-cap side, Hindustan Copper and Multi-Commodity Exchange stood out on the positive side, even as indices there closed in the red. On the downside beyond IT, names like Zensar Technologies, Amara Raja Energy, and Newgen Software saw sharp profit-taking. In the primary market, Marushika Technology, an SME IPO focused on data center cybersecurity and networking solutions, opened its book for subscription with an issue size of just under 27 crore rupees. As of the latest available data, overall subscription on day one was still very light at around 0.09 times. From a technical standpoint, on the Nifty 50, traders were watching the 25,900 zone as a key near-term support. That level gave way fairly early, and the index tested the lower band just above 25,700 before clawing back some ground. Losing that 25,900 shelf now turns it into immediate resistance, with the bigger psychological hurdle still at 26,000. For Bank Nifty, the picture was more constructive. The index briefly dipped towards support around 60,600, but managed to defend that zone and stay well above its first major support. On the upside, resistance around 60,900 remains intact, followed by a heavier supply band near 61,500. Sectorally, the Nifty IT index slumped by roughly 5.51%, making it by far the worst performer as AI disruption fears and weaker hopes of near-term Federal Reserve rate cuts spooked investors. Realty stocks also stayed under pressure, down well over 1%, while pockets of PSU banks and select private lenders held relatively steady. On the regulatory and macro front, India's new consumer price index series showed headline retail inflation at about 2.75% in January, comfortably below the midpoint of the Reserve Bank's target band. The RBI also released draft rules tightening oversight of loan recovery agents and new norms to curb mis-selling of third-party products by banks. SEBI officials signaled that the regulator intends to maintain a status quo on derivatives, Even after the union budget hiked securities transaction tax on F&O, operational reforms continue, including a recent circular aligning system capacity norms for commodity derivative exchanges. Shifting to commodities, Brent crude hovered in the high $60 range per barrel, supported by lingering tensions in the Middle East. MCX Gold April futures were trading around 1,58,040 rupees per 10 grams, down roughly 0.45%, while Silver March futures hovered near 2,60,000 rupees per kilogram, lower by about 1.15%. On the geopolitical front, markets continue to track tensions between the United States and Iran, with reports of potential actions against tankers carrying Iranian crude, keeping a risk premium embedded in oil prices. For Indian equities today, those international flashpoints were more of a mood music than a direct trigger. Looking ahead to tomorrow's session, for Nifty 50, immediate support now lies in the 25,700 to 25,500 corridor. As long as that belt holds, the broader uptrend can be considered a consolidation within a bull phase, with scope for a relief bounce back towards 25,900 and then 26,000. For Bank Nifty, key support remains clustered around 60,500, while resistance sits first near 60,900. As long as banks defend that base, dips in quality lenders are likely to attract buyers. Tomorrow's trade will be heavily influenced by how United States tech futures behave overnight and any fresh headlines around AI regulation. In terms of an actionable takeaway, respect the growing divergence between structurally sound domestic stories and sectors clouded by technology disruption. For short-term traders, focus on relative strength themes such as large private banks and high-quality NBFCs, while using clearly defined levels like 25,700 on Nifty and 60,500 on Bank Nifty as risk markers. That's all for now on this evening's wrap of what moved the market. If you have questions about any of the sectors, stocks or levels discussed today, send them in. Stay tuned for tomorrow morning's wrap and send in your questions.